Welcome to the Edge Market Update for June 9th, 2023. And on Friday, there was a June WASDE report released before noon, and it was neutral to slightly bearish. There was little impact on the market. They did raise, or actually, ending stocks were higher than the trade estimated, so slightly bearish to a neutral report. But traders quickly returned to trading North American weather. And this weekend and early next week, rains are expected throughout the Corn Belt, and then hot and dry conditions are expected to return after that. So the USDA is still expecting a record corn crop at 181.5 bushels per acre, but the 5-year average is 173 bushels per acre. So as we move along here, and if hot and dry conditions do return, maybe a little bit disappointed potentially if we don't get as much rain as they are projecting. Certainly could see a tailwind behind commodity prices if traders do expect the USDA eventually reducing that per acre estimate. So that's why the weather forecasts are so critical right now. Traders are just eyeing those down all the time, and that is exactly what they are paying attention to each week as they trade the markets. But we'll go ahead and get started with new crop soybeans, November 23 contract. And we had some really nice recovery this week. We had a close at 12.04 on Friday, and actually beans are up about 15 cents on Friday. So that report was a little bit better for soybeans, and they're putting strength back into this market, and traders are putting premium back into price here. So we did close above the 20-day moving average at 1186 and closed at 1204. We are continuing up this steep incline or trend line here, and where the daily trend is positive. So as long as we're above the 20-day moving average at 1186, and then below is the 9-day moving average at 1176. As long as we're trading above there, that's pretty good support, and the risk of this market is to the upside. Resistance is at that 1247 level, which I think is key here. We also have the 50-day moving average sitting at 1248, and then long-term negative trend line support coming right into that 1250 area, down to 1245 for next week. So if we do get there next week, expect that to be very heavy resistance, and we will need some different events and heavy trading volume to push through there up to the upside. So could potentially be a spot where if you haven't sold too much new crop, or you want to put some type of a hedge on, that may be a good spot to put a floor in if you want to do something, because if we fail next week here on this trend line and fail below these supports, easily could roll back over. But really, it just depends on what the weather does and how active these traders and how far they want to push it. Good buying volume this week on this contract. Strength indicators, very nice positive divergence here. RSI is back to the neutral line, so we are technically neutral in this market in regards to strength. Money flows, we are very overbought here in the short term, so it doesn't mean we can't move higher from here, but statistically it doesn't help when these are extremely overbought. Like corn did this week, it kind of cooled off a little bit, let these technical indicators reset some and recharge for a move higher. But doesn't mean we can't move higher, but very overbought in the short term. Long-term momentum, we are still negative, but we have started the process of moving back towards that neutral line. But in the long term, we still have a lot of negative momentum, as you can see, as you know, we've fallen from that $14 level earlier this year. And to finish out with new crop corn, last week I talked about how I wanted to kind of consolidate above that 536 area and between that 547 resistance, and that's what we did to start the week. We found a new short-term high at 548, but eventually came back down, broke below that 537, 536 level, and tested this daily trend line. We traded below that steep trend line, but we never had a daily close below it, so that's positive. And the 20-day moving average at 520 acted as support. So prices bounced off of that, closed above that steep trend line. So this week, I would like to see us retest that 537 area and potentially get back above that 50-day moving average at 536 to retest 548. Potentially, if we have a dry weather story early this week, maybe we can break out of that 548 level and get up to that 570 to 565 range where it is extremely heavy resistance, and that is where currently I would be targeting either making a little bit of new crop sales if you haven't already, or maybe with a hedging option, putting on some type of a floor and protect the downside risk of those bushels. Again, I think a lot of people didn't like how it felt when corn just kept going down and down and down to 490. If we do get a good rain this weekend and say they do put more rain expected in the forecast through June, we could easily see us back down in that area. And kind of more so on corn right now, we're more susceptible to breaking support. It's kind of cooled off a little bit compared to soybeans. So, if we close below this trend line this week and close below that 20-day moving average, we could see us try to move back towards, I'm not saying we'll hit 490, but we easily could, just depending on what they put in the forecast. But again, my goal this week is to get back above this 537 area, get up to 548, and if we break above there, maybe take some action in this 570 to 565 range for this week, which will be really heavy resistance. Strength indicators, they really got strong quickly, and they spent this past week cooling off a little bit. They're back to neutral, which is just fine. They needed to do that. Corn really strengthened quickly this past couple of weeks. Money flows were also very overbought, and they are cooling off down to a neutral level again. This does allow them to, better chance of rallying back up for another run here. They're no longer overbought. And then long-term momentum here, we have really moved pretty close back to that neutral line. So we had a higher, that's the resistance level from before. We'll see how we react here. If we can move back towards that neutral line, we may be in a longer-term neutral market. So this may be a range that we could see for the longer term. If you have any questions on option strategies and maybe wanting to look into that to protect your price risk, please give us a call. We have good contacts on who you can utilize to take care of that. But other than that, if you have any questions on your policies or anything of that sort, please reach out to us. More than happy to help, and we hope you guys have a great weekend. Thank you very much.